Good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. Today's Wednesday. It's April 19th. We got, 11, 12 days left, and this month is over. And then we're in May. Summer's starting. My kids are going to be done with school. Oy, oy, oy. It's about 7:26. I'm getting a nice and early start. We got a lot of things to talk about today. Now, earnings so far have been better than expected, the bank stocks. But remember something. Let's not get too excited, and I'll tell you why. And by the way, before I get too deep into it, and I like to get deep into everything, subscribe to this channel on YouTube. It's the Wealth Press YouTube channel if you're watching it on our website. And there's a Telegram link below. Subscribe to that too. I give free trades, updates, news, pictures of my cats, pictures of myself. It's good stuff. I won't spam you with it, I promise you. So subscribe to the Wealth Press YouTube channel, and the link to all the goodies is below that in the descriptor of that channel. I also post those videos there nice and early for you before they get on our website so you can get a head start. Now, earnings. Bank stocks reported they were really overdone in terms of expectations. Everybody was expecting banks to crash, but this issue wasn't impacting big banks like Chase, Bank of America. So far, earnings were better than expected. I am not expecting that to continue, not even close. And as you can see here, the Dow's already down about 109 points. The Nasdaq's down 100 points. It looks like it's going to be a tumultuous volume day. Also, if you look at the bond market, we're at the low. Now, you may or may not remember, but I said I think we're going to fill this gap. And right now, I think that interest rates are going to go a little higher, which means bonds will go lower. So I'm actually anticipating us breaking down. Now, it may not happen, but to me, it looks like we're going to break lower, fill this gap, and then possibly come up, or maybe go to the bottom of this range. Let me just expand this so you could see where this range actually is. So there's a really good chance we'll hit the lower level before moving higher. That's one of the reasons why I don't want to go the opposite way and just trade this channel, because I think this channel may be going lower. And as you could see here, the long-term trend is down, so I only want to take positions to the short side. I don't want to take positions against the long-term trend. That's a big, big no-no, and that will mess us up over time. So again, we want to go with the trend, so what I'd prefer is to be patient and wait for the market to come back up to the 108, 110 level, which would be a dream come true, and then I could sell it again. I'm not concerned about how long it'll take. I'm concerned about getting it right. So in terms of earnings, oh boy, earnings. We had Goldman Sachs come out yesterday. We had Netflix come out. Speaking of Netflix, look at this. We're down already 1.5% on Netflix. Other stocks that came out, we had, let's see here. We had Bank of America come out. Let's see how they did. They're down up 0.98% right now. Let's see other stocks that came out with earnings. I'm just trying to get an idea of how these earnings did, and I want to see the big ones. Let's see Goldman Sachs. Goldman Sachs, they're down 0.53 right now. They were down yesterday 1.7, so that's 2% in less than 2 days. How about Johnson & Johnson? Let's look at Johnson & Johnson. Ooh, down 2.8% yesterday and already 0.3% today. So things are not looking as great. Now, Lockheed Martin did really well. I know that. Let's see how they're doing this morning. They were up 2.4%, and they're up again this morning. That's a defensive stock. But as you can see here, it's mixed. It's a mixed bag. Let's look at United Airlines. I just want to get a feel for how things did. United Airlines did well, and they're up as well. But today we have Tesla earnings. And oh boy, I'm telling you right now, tech doesn't look all that great. They were down yesterday 1.46%. And they're already down 1.82%. So we may have a little meltdown in tech, which again coincides with my theory that interest rates are going higher because bonds are going lower. So if this breaks down, and I think it may, we may see some more weakness, especially in light of what all the craziness the Fed is saying. My point here is don't expect earnings to be all that great. I think they're actually going to be pretty nasty. So today, you've got Abbott Labs, Alcoa, Ally Financial, ASML, Baker Hughes, Crown, Discover, Equifax, that's a pretty big one. IBM, Kinder Morgan, Lam Research, Las Vegas Sands, that'll be interesting. Morgan Stanley, another financial. I'm just kind of going through it with you. Travelers, USB Bank, I like this bank a lot. I actually like it even more now than I did a year ago. And Zion Bank is coming out with earnings. And tomorrow you have American Express. So we're kind of gravitating away from earnings and getting into the broader market. But again, we haven't had the regional and the smaller banks, and it'll be very interesting to see what they report. But the fact that the Dow's down 100 points and the Nasdaq's down 102 points, the Dow down 100 points, that's nothing. But the Nasdaq being down over 100 points, that's significant because look, it's only at 13,000, it's down 100 points. This is at 34,000, it's down 100 points. So it's equivalent to the Dow being down 30 points, which is really nothing. But this is big. This is not random. Now let's talk about the market, and I'll kind of regurgitate a little bit of what I talked about. But I'm very, very nervous because look at where the SPY is. It closed yesterday at a 10-week high, and the sentiment is not all that bullish right now. So unless earnings really, really outperform, we're going to be cooling off for the next few days, which also coincides with the fact that if you look at this trend, it's moving up, right? Price action is moving up. Look at the RSI. RSI is moving lower. Now, I like the RSI. It's a good indicator for longer-term moves, and you could tweak it for shorter-term moves like we do in my VIP room and in my trading and in our signals. But in this case, the RSI is actually headed lower, which means the highs here cannot be sustained with momentum level, and that's a big red flag. Especially in light of the fact that we're in this channel, and if you look at ARK, which is the real small caps, you will see that they're in the middle of a channel. And if you look at IWM, Russell 2000, it's still early in the morning here, you will see we're in a channel, and it can't even get up there. So I would be very, very, very cautious right now with the market. Now, Nasdaq has actually started cooling off a while back, as I'll show you right now. See that? It just kind of went down, and then it started going up. I would be very, very careful right here, especially because, look at this. This is crazy. Look at the divergence here. Look at the divergence here. This is almost at the same level as this, but look at the RSI. It can't even get to overbought, and we're already up there again, right at the high. So I would be very, very cautious that this market's going higher. Now, it could go higher. It could definitely go higher if the Fed backs off, which they're not going to do right now, not even close, and if earnings are so much better than expected. And with Tesla down almost 2%, with other large cap stocks not doing so well, I don't think that's going to happen. So let's be real practical and let's be reasonable here. Now, let's talk a little bit about the market. 3 U.S. benchmark indices struggled for direction on Tuesday as investors waited the latest batch of earning reports and comments from 2 Fed officials. S&P notched a 10-week high. We got to be careful with those 10-week highs. Goldman Sachs fell over 1% after the banking giant reported first quarter revenue that fell short of expectations. That's a huge investment bank. That's a red flag. Johnson & Johnson slumped more than 2% after the healthcare giant warned investors about the lingering impact of inflation-driven costs this year. And Lockheed Martin rose more than 2%, was among the top percentage gainers in the S&P after the U.S. weapon maker reported upbeat results that reaffirmed their outlook. Now, here's where it gets interesting. Fed President Bullard said Tuesday the Fed should continue with its interest rate hikes after the latest data showed persistent inflation in the economy. He said inflation is coming down, but not as fast as Wall Street expects. I agree with him 150%. Bullard warned that also Atlantic Bostic said he favors raising rates one more time and then holding them above 5% for quite some time. There's still more work to be done, and I'm ready to do it. Yeah, at least 2.5. We now have an 85% chance of a 0.25 basis point rate hike. If this stays about 85%, then the reaction from the meeting on the 3rd of May, which is when they're going to be doing the dirty deed, is not going to be changed much. Now, first quarter earnings steam picks up. Oh boy, does it pick up. Tesla, Abbott Labs, IBM, Morgan Stanley. They're all reporting, and we're still expecting a fall of 4.8%. Now, it's actually a little better with the large caps reporting. It was expected 5-point-something%, but I wouldn't hold your breath, not for a second. Today, all eyes are focused on crude inventories that are coming out in a couple of hours, and economists estimate that this figure to be negative 1.88 million compared to a value of 0.597 million. Also, we're looking at speeches from Williams and Goolsbee for fresh insight into the Fed's monetary policy. Europe is watching the U.S. markets very, very closely this morning as investors digest fresh U.S. and U.K. inflation data. Weakness in real estate and technology stocks is leading the overall market lower. So be very cautious. China closed lower as an uneven economic rebound and contradictory data from China. No, who would believe that? In the first quarter, weighted on investor sentiment, stocks of property developers, one of the biggest drags on the market after data on Tuesday, showed Property investment dropped 5.8% in January, March from a year earlier. Weakness in technology giants also weighed on the broad market. And in Japan, we also closed lower, snapping an 8-day winning streak after Mr. Warren Buffett said earlier this month that he's going to put more money in Japan. And if you're in my live VIP group, I'm actually going to be talking about that tomorrow. I have some insight on that. Also, data on Wednesday showed that the major manufacturers became even more pessimistic about the business environment in Japan, not in the U.S. And today, Netflix is down. Intuitive Surgical gained 7%. Western Alliance climbed 15%. Interactive Brokers slid. Ouch, not good. But people will be watching Netflix. That's a big one. That's a big one. And again, there's a lot of earnings coming out today. We got to be very, 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 very cautious. Now, folks, before I let you go, and boy, oh boy, there's a lot to talk about here, but before I let you go, oh, by the way, I forgot. Today is Wednesday. I give you my strongest stock and my weakest stock. How could I forget? I almost forgot. So right now, I don't think I would really favor tech. I like this Southern here. Look at this trend. Nice, even, steady trend. SO. Stay away from tech right now. It's very squirrely. It's dangerous. So I like this Southern. SO ticker symbol. Really good stock to trade to the long side. I also like, let me show you the other one I like. KBR. Looks really good. It looks like it's going to break out. But I really like this Southern. I really like this Southern stock. It's a good one. Now, my worst stock, let's go to the 20-week low chart. So, there's some dogs out there. There's some real dogs out there. Actually, you know what? Let's go back a few days and see if any of them rallied. Now, here's a beauty. This is a beauty for you. Digital Realty Trust. See, it had a couple of up days. I don't think these up days are going to amount to anything. That's what I like to do. I like to go to the 20-week low, and then I like to go back a couple of days and see if a few of these 20-week lows rallied over the last couple of days. And I'll tell you, some did, some didn't. But this Digital Realty Trust, I don't think anything's good going to happen, and I think it's best to fade this stock right now because REITs are just not that hot right now, and I think the market's going to be cooling off. So DLR looks like a juicy one. Other stocks that look really good to the short side would be PNC and JD. JD, PNC, and as I mentioned to you again, DLR. So I gave you several stocks. Now, before I let you go, I was sorting through my pattern trader hit list with my assistant Matt the other day, and I discovered a brand new trade alert. Not only that, but we've nailed 31 out of 45 trades since the strategy launched May of last year. I can't believe it's almost been a year. And I want to do everything in my power to make these trades available to anyone who wants to receive them. And I've done something really special to do that. That's why I'm holding a special class today at 1 p.m. Eastern Time to share the details behind the strategy and offer you something very special to help you get prepared. Click the link below, sign up for this free class. I think you're going to really enjoy it, and I think you're going to have a great time. Follow the link. Now, if you can't find the link, go to the YouTube Wealth Press channel. It's there as well. It's waiting for you. And you can also subscribe to our channel, get these videos earlier, and subscribe to Telegram and get pictures of the good stuff. Bye, guys. I'll talk to you soon. Have a great day. Don't forget, Pattern Trader is hot. Get into it. Don't miss out. Bye, guys. We went 15 trades in a row without a loser when we first started this program, if you can believe that. Bye, guys. Have a great day, and I'll see you on the other side. Bye.